The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Starting the show like we usually do, looking at the German DAX. There appears to be news on the horizon that the German auto market is doing well, so the market should be up a little bit. And as you can see here, we did make a little bit of a butterfly pattern here in the DAX this morning on the 4-hour chart. If we take a little microscope and look down at it just a little bit closer, you'll notice that that butterfly, when it formed, also completed an ABCD up there at 11,540, and we've dropped about 80 points in the DAX from that level. This is short-term pattern, of course, folks, but we do want to remind you that sometimes they work, sometimes they don't. That's the key. Now, let's take a look here. We're going to go over a couple hundred miles or kilometers over there, and we're going to take a look at the London market, the FTSE. This is a daily chart. As you can see, here we have an ABC to the downside, ending exactly on December 24th when we had the big bottom here in the U.S. stocks. And you can see the ABCD rally that we've had since that time. You can imagine where we are when you look at the stock market in the U.S. versus the European markets. There's been a huge difference. You know, we're not even at a 50% retracement of that whole move down, and we're above the 78% retracement now in the stock market for sure. That's a really interesting one, you know, to really look at. Now, I wanted to briefly had several people ask about Bitcoin. I know we're not too much involved with that, but since they asked, I think we should bring it up and pay attention to it because it's a good technical picture. You'll notice the bottom that we made there on the ABCD to the downside, right at that 3,400 level, it's 3,375. Hit it exactly. Then we had a rally up to almost exactly 4,200. That was the 78% retracement of the high that we made back on December the 28th. And then you had the big sell-off. This was due to a news announcement yesterday on Sunday when it's, you know, a lot of trading goes on in that market on Sunday because these folks are on different exchanges than what we look at. It was an announcement of some kind, and it, you know, shot the market down. And you'll notice that it stopped at that line we focus on as the 20-minute line. That basically will act as a support line sometimes, especially when it comes in at a really important Fibonacci ratio. In this particular case, it's setting at a 50% retracement. I don't know what happened after that time. This was yesterday afternoon late when that occurred, and that's when I did the chart. So I don't know where the Bitcoin is trading, but the last time I checked on it, it was around 3,700. It really needs to hold above 3,500, or, you know, we could be looking at much lower prices. This is all about the blockchain, folks. I don't think it has much to do with cryptocurrencies, but again, this is from the cheap seats here in Tucson, Arizona, and that is, I don't know very much about what's happening with that kind of stuff. It's very, very heavy technical and far beyond the old Cowboys pay grade. Let's take a quick look here at the Treasury bond market. This is one that we've been relatively negative on for quite some time. As you can see here, on Friday, we had a really nice retracement up to that 78% level, just about spot on. In fact, it was spot on. And you notice now that we have the ABCD structure heading down to this 145.06 level, and that is an ABCD structure. That should be really strong support there, folks, at that 145.06, because going below that would certainly be a level that would really break down, and then you're going to be looking at something far more severe. On the long-term charts, you know, we've been through this many times in the bonds and the notes, and it certainly looks a whole lot lower. But right now, we're looking at some support coming in here just below that right around that 145.05 level. Thank you very much, Marshall. Marshall has just told us that the Bitcoin is trading pretty much the same place, 37.66. So that big volume sell-off has dissipated for a little bit, but whether it's going to continue or not, we'll have to wait and see. There's a lot of news this morning, of course, in the gold market about the Newmont Mining being taken over by Barrick Gold. That's going to be one big conglomerate, folks. And we take a look at the price of silver first. You'll notice that the price of silver made a double top last week, and that was just right above the 61% retracement by a few cents. We're trading at around $16 an ounce right now, I believe. If we can get it above $16.40, we've got a chance for that pretty good move to the upside, which would take us up to around $16.60. On the bullish side of this, there should be really good support, folks, in the silver at around 15.20, 15.25. That's a 382 retracement of that move, and it appears that that would be a spot where you could, if you really want to get into the silver market, which I think everybody should have some of these silver rounds, or silver dollars, any silver coins actually that are 1964 or under. But those are the ones that are, have the big silver value. They're 90% silver, but there's really good support there at that 15.25 level. Looking at this chart, it really does look quite nice. Now we've had a pretty interesting move in gold. We got up to that 13.50 level. We were able to back off $25, and that's all we've been able to back off so far. So it's holding, relatively well, and that's an important thing, I think, to make a point of. Anyway, it's something very, very important. Regarding the Treasury bonds, here was a chart that was given to us by one of our friends, Mr. Jim Twentyman, and I wanted to bring this up to you and show it to you. This is a chart of the interest rate market going back a little bit before our time, going back 200 years. And what I want just to show you here, that the three drive pattern that we had here, this is the major bottom, what I think, was the high in the bond market, the low in yields when we were negative yields. But you had that three drive to a bottom pattern, and now you're starting this movement to the upside. So pay really close attention. If you look at that high that was made back there in 1981, I believe it was the low in the stock market was August the 9th of 1982, but the bond market, I believe, bottomed in 1981. The bonds were trading at about 50 cents on the dollar, and interest rates were 13% on the T-bill rate, 16% on the long bond. You could buy AAA paper, not with no interest, not tax-free AAA paper, for 14%. The problem was those bonds were callable, and they only lasted for about a year because interest rates, once they started to drop with our new chairman at the time, Paul Volcker, the market, certainly had a tremendous move, and it really started to move right after the October crash of 1987. That was one of the real catalysts for much lower interest rates, and since that time we've had lower and lower interest rates. Each of the Federal Reserve chairmen have done their best to keep rates low, and that is in fact what we've done, putting money into the okay, let's take a quick break here and we'll get back, and we want to talk about the British pound here because we got some interesting things happening in both the pound and the euro. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. I posted a chart of the British pound here, primarily because, we're hearing news all the time from Brexit, just like we have our political stuff here. They have their political stuff there. And from what I've heard from my friends across the pond, they are much more vicious than our politicians, if that's hard to believe, and I certainly think it is hard to believe. But you can see here the pound has taken the 78% level that we had down there at the 124.50 level. We've had a really good rally, 600 pips, and we're just about ready to take out the 78% level up here at the 131.25. There'll be some resistance up in that area, of course, but we'll have to wait until we see if it gets there. But still looks relatively good. So we'll watch that as it goes through these different cycles. But it does look like it does want to move higher. Now let's get to the stock market for the U.S. We had some interesting things happening here last night. From what we understand, there's been some type of a agreement made with China, but we don't know exactly what it is. But let's just look here. This is what I was looking at for today, folks. This is the Dow Jones Industrial Average over the past month. I put the cycles in here, as you can see, the ABCD. Now we are actually another 160 points higher this morning, so we've exceeded that D point. But if you'll notice here that the cycle timing comes in at this time level of the 25th of February. Now, if that's going to be a cycle date, I'm not sure, but we don't really have a whole lot going on cycle-wise. In fact, there's very little going on today and tomorrow. Following that beautiful full moon that we had this past week. It brought a huge blizzard here into Tucson, and we enjoyed the snow on the mountains for one day, and then it dissipated very, very quickly. If we look at the next one, of course, which is the New York Stock Exchange Index, and what I'm doing here is I'm looking at 4-hour charts, and I'm just drawing the ABCD patterns in because this is the one that will be hit this morning, because we are going to hit that 1.618 expansion up there just a tiny bit higher. That's what we're going to be calling this market early this morning. So the NYSE index should make a higher high at that 1.618 level around 12740. We're trading at 12691, so about 50 to 70 points higher in that New York Stock Exchange index would hit that. So whether that's going to mean very much, I am not sure, but we want to keep an eye on it anyway. Remember, folks, that we've got a really interesting thing going on with the puts and call ratios, because it certainly has a really, if I can just find the chart, what did I do with it? Shut the front door and raise the rent. Oh, here it is. Just a second here. This is from our friends at the Elliott Wave Theory. You'll notice here, as we look at this, the optimism has reached extreme levels. We're near what is usually a market high. You can see the one back in September, the one on December 3rd, and we've got another one coming in right around this time right here. So this should be very, very interesting today and tomorrow to see what happens with this. Now, we'll let the market tell us what's going to happen, but right now, we are certainly in an area that is highly susceptible to being overbought. As you can see, we've been basically straight up for 9 weeks in the Dow Jones Industrial Average. The last time that happened was 25 years ago, and I'll bet you there's not a lot of folks in the room here that were even trading 25 years ago. So keep that in mind as you're looking at some of these things that we're paying attention to. Another one that's interesting comes from Martin Weiss of Weiss Research. Here's what he's looking at as far as these dangerous bubbles that have occurred. You can see the dot-com bubble. That was a big one, folks. If you remember, that dot-com bubble, the first one was pretty bad. It went from 2000, when we topped in March of 2000, we dropped 85% in that bubble. If you see the housing peak that we had to 2008, that one dropped 85% in the NASDAQ also. And now he's calling the bubble of everything. But whether that's the case or not, that's not involved with us. But the pattern is actually very interesting because it is a 3 drive to a top pattern. I want to share with you something that I think is really important. I'm going to bring this up. I featured this in the futures part of the newsletter this week because I think it's very, very important. This is from one of the bigger grain houses in the world, and they're showing that the stocks overhang will take years to unwind. They're talking about soybean stocks, folks. In other words, you can see there where in July of 2018 when the tariffs came in, and they're saying the stocks usage and everything is going to be down for about 10 years is what they're basically saying. They might be right, and I don't know, but all I remember very, very vividly was way back in early 2000, Barton Biggs was in charge of, I believe, Morgan Stanley, and he came out and he said that the only use for soybean meal would be to put it on the floors of the country and western bars in place of sawdust. I swear that's what it was. I wish I would have saved it, but I didn't. And anyway, soybean meal rallied $35,000. It went up 350 tons at $10.50 a ton. That was $35,000. So just because these reports are out now, a lot of things can happen between the time when the crop is planted and when the crop is harvested. So we've had 4 or 5 years now of really good crops. And then we'll be, how would you avoid the rats? You're right, Mr. Bill. That would be a big problem. But we will have some type of rallies, in these things intermittently during the marketing season, but we'll have to wait and see, what happens. But the El Nino has started to show its head a little bit. We're seeing, you're seeing crazy weather patterns when you see a blizzard in Tucson, Arizona. We had, just really amazing the amount of snow that we had. And this isn't the worst one. The worst one we had was about 8 years ago. We couldn't even drive up the hill from the airport. There was about 6 inches of snow on the ground, which yesterday we didn't have any snow on the ground. It was all in the mountains behind us. But there was still a great deal of snow that was there. Now, someone asked a question about Tim Boss because we've had Tim on before, and I wanted to bring that to your attention. Remember, Tim was looking for a high around the I think it was around the 14th of February, you can see right in the middle of February, and here we are on the 25th, and we're still going up. You know, these things work. Sometimes they work, sometimes they don't, but keep in mind that we're here to try to, you know, find a place where you can enter and not risk very much and, you know, catch some really big moves. Now, the Canadian dollar, which we've been following very, very closely, is still moving, you know, really nicely in our opinion to the downside. We still think that will continue in that direction. We'll get this up here so you can see it here on the long-term weekly chart. And we'll get that up here, and you'll see that this is what we're looking at here, about another 400 pips lower in the Canadian dollar. And then you'll have to really watch that one closely because it'll be in major support, and it's taken a long time to get it down here. So this is going to be a real interesting one when we get a little bit lower here in this Canadian dollar. That'll be one that looks pretty interesting. The U.S. dollar is still hovering between 97 and 96. As long as that continues, I don't think there's going to be much happening in some of these things and some of these other markets that we're looking at as far as grains and some of the other exportable things that we're watching. But in fact, you know, that can happen, you know, in a heartbeat, that things could change. Remember, I'll do the early morning daily one here. You'll be able to see where we are here. In the daily dollar index, you're seeing we're looking for a little bit high come in now, a low started to come down. That means the euro should be popping up a bit. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I have to share a quote that David White from TFNN put in the room here. It's from Michael Jordan. The quote is, "I have missed more than 9,000 shots in my career. I have lost almost 300 games. On 26 occasions, I've been entrusted to take the game-winning shot, and I missed. And I have failed over and repeatedly in my life, and that is precisely why I succeed." Michael Jordan, number 20, oh dear, 28? I can't even remember MJ's number. It was 45 after he got back from the, oh dear, was it 28? 45 is when he went in to play baseball, but I believe it was 28. Oh dear. All right, let's not worry about that number. Okay, let's move on to a couple of other things that we want to. We've already covered the bonds and everything, so I think that's important to pay attention to. It looks like they're going to get down to that support down around 145.04, 06. That's probably because there's going to be market's going to be continuing to rally here. We're up about 200, I guess, in the Dow as risk goes off, and we're going to see what's happening to see if that is in fact going to be the case. All right, let's move on here and cover a couple other little things that we really need to look at. One I think is really important to look at, folks, and we brought it to your attention here. I got to show you something from our good friend Mr. Z in the room. He gave us a beautiful chart here on the gold long term here. You'll notice here this is a monthly chart, and you'll notice that beautiful head and shoulders patterns there, left shoulder, right shoulder. It's off a little bit on timing, but you could move it either way by a month and still be spot on. But that's a really interesting one. Once we clear this final event here at 1369, I really think you're going to start seeing the gold market accelerate rapidly. The most it can back off, folks, we've moved $120 to the upside, and we haven't had any move that has been less than $25 to the downside. That's a very, very bullish chart. So sort of keep a close eye on that one. Very, very important. Now, I want to share with you, this is a seasonal chart that we get from our good friend Jim Twentyman. We'll put this up here. I want to show you this is the chart for for ethanol, and I'm going to start following ethanol pretty closely because we have some friends over in the Chicago area that are going to be looking at it really, really closely because they believe that what's going on in China is related to ethanol use. They need ethanol to get their clean air, and whether that means much or not. But we're going to start watching that a little bit closely, much like we did with the natural gas. And if you want to see a bullish chart in formation, folks, this is it. Here's this. We brought this to your attention last week when it was down around that 256 level. We are now trading up around 276. We moved well over 20 points to the upside, and it certainly looks like it's ready to move to the upside. Number 23. Thank you, Marshall. I knew it was 20-something, but why I couldn't remember 23, I don't know. This is the old CRW system. So we'll remember that. Thank you very much. I appreciate that very, very much. Now, I did want to mention something about trading in the UK. Someone's asked me a question about how they do some of their trading over there. They're a lot different than us, folks, because these firms over there, they don't, when you do short-term trading, you're not charged any taxes on your gains. And that's a big difference, the spread betting that they have over there. But they give you information that we usually don't get here. Here's a good idea of what's going on over there in the S&P 500. Let me just bring this up to you to show you what's going on here. You'll see here when you look at this is showing you that the amount of speculators between the longs and the shorts. The longs are the big commercials, and the shorts are the small specs, is what it's showing on this particular thing, which means the market still probably has more to go to the upside if in fact this is the case. Now remember, now they're under a thing called GDPA, Government Data Protection Association. So if these people make a mistake on these data, they are really reamed, boy. They really get big fines and stuff. So they try to keep it as transparent as possible, much more than we have here. But at that time, who knows? But this is what they're telling us as we look at some of these things. Okay. Let's move on here to one other one that I wanted to bring to your attention that I think is important. That's about Elliott wave. I wanted to, just because people keep asking me all the time, why I'm not an Elliott wave person. And the reason is I just don't count the waves like everybody else does, folks. This is one from, you'll see the just classic wave theory. You can see, look there, you can see the 135. That's nothing more than a 3 drive to a top pattern. And you see 2 and 4 are nothing more than, BC swings. So, that's keeping it as possible. Now, if you look at divergence, you can see, the stochastics there. Sure, that can help. But remember, that's lagging the market by quite a bit. And sometimes these stochastics can stay up in these areas for quite a bit. And I think Basil Chapman's pointed that out to us many times, that the stochastic can get up there and stay there. And when it backs off, it's just recalculating. So, it's that's the main reason. I just had a hard time counting these little subwaves, the larger waves. I never had any trouble with. And all I tried to do was look at the major Fibonacci support lines, which are on the downside 61 and 78%. And then I look for extensions of 1.27 and 1.618. And when they all come together, then I say, well, this is a spot where we're most probably, going to have some type of a turn. And that's really what we're looking at. If we take a look at the euro, since we're talking about that, and I did want to cover it, you notice that we made that beautiful, perfect ABCD pattern right to the downside. You can see that on February the 15th. And if you look closely, and I think you will, you'll notice that we had 2 1.27 expansions, making it a 3 drive to a bottom pattern. The first drive is on the 12th of February, the 13th, and then the 15th, right on the money. And now look what we're doing is we're making an ABCD structure, the upside to the 61% retracement up to around the 114.15 level is what it looks like. Once it gets to there, you're going to be very interesting because you're going to equal the move between the 24th and the 31st. So this is why we're following some of these things. It's going to be, very, very interesting. Last night, in the middle of the night, I was doing a webinar with some friends over in Australia from Sydney, and we were going over these same patterns in the Australian dollar, and they just were so surprised that these ABCD patterns appeared in the Australian dollar like they do in some of the other things. I don't know why people are not exposed to some of these things. I think the problem is that it doesn't work all the time, and it's something that doesn't work all the time. You better get used to that. Because remember, on those 4 things that, the 4 fears that Mark Douglas talked about, the fear of losses, those are going to happen. That's just mother, God, and country. So get ready for that. That's never going to change. But what you've got to do is to, find the ones that are working in your favor, and that's the one you're really looking at. Here's the gold market that I wanted to bring to your attention here. You'll see here when we look at this gold, since December, we've gone from 1180 all the way up to 1350. That's $170 that we've rallied in the gold market, and the biggest correction we've had during any of this time has only been, I believe, $40. That was the one in November. The rest of them have only been $25. And what we're hoping here, and hoping is a terrible word, is for trading is trying to get it to around 1292. That's going to be tremendous support at 1292. We'll be right back. 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, folks, we're back, and I believe we have a caller on the line. Mr. Z, are you there?
I am, Larry. Thanks for taking the call.
What can I do for you, my friend?
Larry, I wanted to ask if you could just elaborate for us on trading of the euro. You're very clear on chart patterns that you're looking at. I'm interested in hearing you speak to a couple of questions, and I'll lay it out this way, if you could, please. First, for 4 or 5 months, the euro versus the dollar has been in a range of 3%, top to bottom. And that, you know, as far as I'm concerned, is flatlining. So my question is, during the past 4 months, with ranges that small, do you continue intra-week to trade the euro currency, or do you leave it alone?
Actually, I trade the euro just about every day, John, and the reason why is it's the most, it's the easiest one to look at. It's the by far the greatest liquidity of anything you could possibly trade. The volatility is relatively good. You can use stops of $300 to $400. The patterns follow nicely with ABCD, as we've seen many times, and it does Gartley's 3 drive patterns and ABCDs all the time, and that's the one that I look at. In fact, I trade it every single day. There's not a day that goes by that I'm not looking at something. I'm usually only looking somewhere between 50 and 100 points sometimes, but sometimes it'll only give you 30, and then you take the losses as they show up. But it's just the best one to trade of anything that you've seen. It's not exposed to the news too that people get, because it's not, there's no grains involved, and there's no supply demand and stuff that you see. It's just a pure money market, and that's why it looks so great. The U.S. dollar is okay, but the liquidity in the dollar is just very, very small compared to the rest of them. So I really don't get involved too much with the U.S. dollar. It's mainly the euro that I'm looking at.
I appreciate that input. Sounds to me like you're using that market as your personal ATM.
I try to, yes.
Very good. Just to follow up too, your commentary there. When trading it regularly, as you do, and when the euro currency for 4 or 5 months has been literally just in a 3% range, can I ask, or can you just give us some guidance as to when you enter trades regularly? Are we talking trades that you're involved in for a week, more than a week, a day, less than a day? What's your typical time frame? I'm just trying to get a handle on that, because I am not good at doing what you're describing, and I'm looking to get better.
If you think I'm going to believe that, cowboy, you got better call somebody else. You're pretty good at this, John. Anyway, the chart that I posted here in the Den basically shows the big ABCD pattern. You know, even though it's been in a 3% range, the bias has been to the downside. And as you can see, when we made that 112.40 level, that was a perfect 78% level. It was finishing the ABCD pattern. Those were two pictures that you really want to look at for, you know, getting long the euro, and now we're trading up around the 113.60 level, and you can see the ABCD patterns that have come in just recently, just in the last 4 or 5 days. You ask the time frame. Well, I'm trying to buy higher bottoms there, and you see we had 3 higher bottoms, both right at either 61% retracements or 38.2% retracements, and you know those were coming down on a 4-hour chart, you know, right into major support. They stopped right there. So if you put your order to buy it there and you risk $300, you know, the odds are that you've got a better chance of winning than you do losing, and that's what gives you the edge that you're trying to get. I hope that helps, but you know, that's really what it's doing. It's quite simple. It's not rocket science. It's just something that you know, looks really interesting. So
yeah, no, I find all that commentary very helpful, Larry. And a related question, when dealing with the euro currency, we've got a couple of legitimate vehicles that we can choose from to accomplish all the same objective. One, of course, is using the CME in Globex futures contract, and we also can then just go into the cash market and leverage it via, you know, most brokers. Do you have a preference, one versus the other, for your style of trading?
Yes, actually the best way is to use the CME, because if you're not trading large size, if you trade more than 50 contracts, you know, which is roughly $5 million, but if you trade, you know, 50 contracts or less, you can do the euro at the CME very easily. It's a contract. It's not a Forex where you're, you know, doing against the bank itself. You're actually dealing with a contract, a physical commodity contract, you know, with specifications. The difference is that the charge at the Merc is usually around $4 in and out, whereas if you do a euro contract at one of the Forex banks, they're usually going to charge you about 2 pips, which is $20. So if you trade 8 times a month at $20, you know, you got a pretty high figure there to look at, whereas if you're doing it with $4 a month and you're looking at $8, you know, versus, you know, several hundred. And so you're saving a great deal of money on commission, plus your fills. You're not going to get any slippage because the market's so big. There's really no benefit for you to trade in a big bank, you know, and the safety at the Merc is, you know, greater than just about any place. So that's why I like it. I mean, I think it works pretty good. But if you're trading at a big bank, the major 13 Forex banks are just fine. So that should be no problem at all.
That is very helpful. I appreciate that. Let me think. What I wanted to ask you to wrap up with on my conversation here is if you can just share with us what you're looking at either on the hourly or the 4-hour chart with the dollar-yen USJY.
Sure.
I'm at a loss on that one for the past couple of weeks. I'd like to see what you're seeing, please.
Well, I don't think that's there's not much going on in the dollar yen. If we just take a look at this, this is a daily. This will describe everything you want to see, John, because if you look at this, you know, we had a big move down. That's when the bank robbery occurred on the January 3rd, when Japan came in and started playing games. You'll notice that we rallied the past month right up to the 61% retracement there at 110.90. We're still trading at 110.70, so it's gone nowhere for 2 weeks, so that's not bearish. I mean, there's no selling in there, so it's just a matter of when it takes the next high out, it looks to me. And if it got a nice retracement down to that 109.48, I'd certainly take a look at it. But there's no volatility in that dollar yen right now, which is unusual given the fact that the news we're hearing about China and all this other stuff. There should be more volatility there, but there isn't. So there's nothing really to do there. Whereas the euro, much easier to see. You have higher bottoms, right at perfect numbers. That makes it easy to trade. This one's not. That's not as easy.
Indeed. Well, listen, I thank you as always. I'm always learning something. I appreciate that.
Me too, John. I learn something every day, and a lot of it is from you because you're one of the best, and we appreciate all the work you do here at TFNN. You put some great trades in there, buddy. Keep an eye on that natural gas, John. I think that one's got legs.
Excellent. Thanks, Larry.
All right. Thank you, John. Mr. Z from the Den, 877-927-664. We'll be right back to wrap it up, folks.
We both know you've got what it takes to crush your goals with the will to make it happen. So why haven't you accomplished it yet? For most, the answer is fear. Fear is that limiting factor that stops us from getting what we truly want, but it doesn't have to. That's why on Wednesday, February 27th from 5 to 6 p.m., I'll be hosting my 1-hour workshop, Overcoming Fear in 5 Easy Steps. Hi, I'm Steve Rhodes, the 2018 Market Timer of the Year, author of Mastering Probability, and an expert in human emotion. Subscribers to Mastering Probability gain free access to this extraordinary workshop where I'll coach you how to bust through your barriers of fear. How you respond to fear is what sets you apart from the rest of the crowd. Look, this could be the most valuable hour we ever spend together. So come to the homepage of TFNN.com and begin your 30-day risk-free trial of Mastering Probability and take the next step towards the life you deserve.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're going to take a look at the platinum chart, folks. It's moving very strongly. You'll notice we made that ABCD pattern down there at the 780 level. That matched the double bottom that we had on December the 10th, and since that time we've been up 8 straight days. We're now sitting right at the 78% level of the high that we made back on November the 5th, and 8 days being up is highly unusual in itself. So don't be too surprised if it has a little bit of a correction in here, but it's starting to look extremely bullish. Right now, it's leading the gold market. Before, we've been lagging badly, and now it's moving in the direction that you think. Whether this is related to that buyout of Barrick Gold over Newmont Mining, I'm not sure. It's in the news a lot, so I'm sure that'll be part of what's going on here. But, you know, all I know is looking at the chart here, we're up 8 days in a row right at the 78% level. So I would certainly, if you're in that from the long side, is to at least bring your stop up to say around 845, that you lock in something, because that's a heck of a nice move in a beautiful ABCD. And remember, we counted that ABCD. The AB leg was perfect on the downside in time. It was 10 days down on the AB leg, and on the CD leg, 10 days down right at the 78% level again, making it a double bottom. And then it had a heck of a run. That's pretty much what we're looking at in the natural gas. It did pretty much the same thing, and it's had one heck of a move also. It's moved $2,000 in 2 days, so that's a lot. Whereas the platinum has moved from 782 all the way up to 856 in 8 days. You know, that's what, $4,000 in 8 days versus $2,000 in 2 days. So the natural gas is moving even faster. So keep an eye on that. That's has potential for legs. So live every day in an attitude of gratitude. May God bless. And we'll see you on the flip side tomorrow from the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania, zip code 19147.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!